Hello and good morning in Europe, good evening in United States. This is Ahura with another daily outlook video. As you know, in this series of videos, we are looking at the market, what happened yesterday, what is going on in the stock markets, and generally in the financial market, and what is our expectation for today. As you know, it's finally the second day of FOMC meeting, and today it will be finished. We will have the Federal Reserve announcement, and then Mr. Powell's speech right after that in a press conference. This will be the beginning of the series of the central banks meetings. You know that this week we will have too many central banks meeting from different countries, almost all developed economies. So therefore, focus of the day will be on today's FOMC meeting, even if we have too many other data. For example, for now, so far we had Chinese data, which shows that industrial production is very bit was better than expectations. Later in the day, we will have inflation numbers from many European countries, including Canada, and we will have the retail sales from United States and too many other data. However, main focus of the day will be on the Federal Reserve meeting. Expectations. Let me just review of yesterday's. Yesterday's the main data was PPI, American Producers Inflations or Producer Price Index. It was at its 9.6% in its highest level ever. So we didn't have such a 9.6% inflation in producer for United States history. Ended with the increasing US dollar. As you can see in the chart, US dollar increased, and it was one of that reasons because it's also helped our expectations from Federal Reserve to increase the rates a little bit faster to at the tapering levels. What is the expectations from the Federal Reserve meeting? If we go to the SP 500 chart, Federal Reserve meeting, the expectations is like this. The consensus expectations, the overall market expectations is to see the level of tapering to increase up to $30 billion per month from current $15 billion. So it means that it will end in the middle of September next year. Sorry, middle of the March next year, 2022. The other expectation is to increase increase the rate hikes at least twice in the next year, between 2 and 3 times next year, and each time by 0.25 percentage or 25 basic points. This is the expectations. Anything less than this will be dovish, will be less hawkish, which the market will accept the dovish policy. So it means that anything less than this market expectation means positive for stock market. Same thing, or a little bit better, more than this means hawkish, and it means dovish, or it means bearish. It means hawkish policy and tightening policy will put the stock markets under pressure. So hawkish policies will put the stock market under pressure right now, and dovish will help the stock market to increase. Dovish means tapering about 20, increasing the tapering from 50 to 20 billion dollars. Anything above $25 billion tapering means hawkish. Less than this means dovish for the stock market. For the crude oil, last night we had API weekly report. American Petroleum Institute shows that the in the private sector, inventory levels in the United States fell more than 800, a little bit more than 850 million barrels in the last week, while the market expectation was to decrease more than 2 million barrels, 2.6 million barrels. So it means negative for the oil market. On the other hand, we had IEA monthly report, which shows that expectations for increasing the level of demand in the next year is a little bit. They decreased, actually, let's say like this, they decreased their demand expectation for 2022 because of impact of coronavirus. So that was the negative for the oil market, and we have to wait and see for today. And on the on the gold market, as you know, the gold market was under pressure because expectations of inflation, which it means the higher bond yields, expectation for higher bond yields, and it will put the gold under pressure. It put the gold under pressure. On other hand, the hawkish policies, if it decided today, means negative for the stock market, so it will increase the gold demand. So to see and expect the gold to increase from these levels is not some so far than expectations to see the gold again in a higher levels today. So this is the gold. And about the currencies market, as you know, the euro USD, which we talked about that before, any number under 1.3020 is negative, is bearish for the euro US dollar. And euro still is a little bit in a weaker position against US dollar and against its other crosses as well. About the cable and about the pound sterling. Pound is a little bit in a stronger position because of great data from the United Kingdom that we had, and hawkish policies that we are expecting to see from BOE meeting this week. So it will also help the pound to increase against its crosses, even if it cannot increase too much against US dollar, because US dollar also, it's by itself is a little bit strong. Even if it cannot increase so much, but still it is strong and it will increase from these levels. This is the general expectations. This is about the pound sterling pound. About the cryptocurrencies market, the cryptocurrencies, we don't have enough reason for now still to see that increasing. Still Bitcoin is trading under trend line, under its trend line, and it's bearish kind of area. For now, yesterday just the Dogecoin increased about 30%. After that, Elon Musk told that they may accept the Dogecoin in the as a payment method for Tesla. So the Dogecoin decreased a little bit more than something like about 30% yesterday. It's correcting itself again after the sharp increase. Can see if with this increase of yesterday, Doge increased above its trend line. Overall market is still negative for the Doge. If the market, if the other cryptos they cannot increase, the Doge also will be a little bit still under pressure to increase itself. But generally, the market, cryptocurrencies market, also is under pressure, same as same as other days, previous days, because as we yesterday and days or other days talked, we don't have enough reason right now to see bulls in the chart, in the cryptocurrencies chart. This is the overall market. Let me see if I don't forget anything to tell you about the today about the oil market. We will have still the EIA weekly report that will tell us about the inventory levels of the offshore inventory levels. But the economic calendar, yeah, we don't have that much data to. So I mean, we have stuff to watch, but FOMC meeting and statement is over affecting on everything. Okay guys, it was overall market condition and market situation. Hope it was useful for you. Let me know if you have any idea in the comments. Write me in the comments what you want me to cover more, what you want me to talk about, and stuff like that. See you guys tomorrow, and goodbye.